So far, I'm not filled. And I'm about to cancel my order. I'm filled. Okay. So what we want to see is this green line down here turn up and get up into the cycle. And when it does, we'll have a higher swing in place. Now we need to get up to there to get the goal for the day. Okay. Now gold is bouncing all over the place here. It's got bullish separation, but the cycle's starting to go down kind of steep. It's not too steep yet. Let me look at the DOM and see where it's trying to go. Yeah, now it's too steep. Crude's still got a chance here. See that big number up there where my target is where crude's trying to go. See these totals down here being so close means that I'm going to have to suffer through some chop before it goes. We close above the MA1 right here. There we go. Stop to break even. Now it should go up to, well, up to here. My target. Okay, now I don't normally put targets on. Okay, I'm going to break even. I don't normally put targets on, but I do when I'm trying to get the goal for the day. Okay. And it's not like it's a lot of things. It's just things I get to do. Okay. I'm taking my bill. Okay. I have taken my pill. I had my vitamins. None of the slingshots right now are going to let us trade. I'm not using the trade setups we do in here. Okay. So we're getting really choppy. Let me check the news events. The first week of the month. This is usually a bunch of news events. Let me check out what we have. 7 a.m. ECB President Lagarde spoke. 8 a.m. Trump spoke. We had average hourly earnings came in better than expected, way better than expected. Non-farm employment change came in a little better than expected. Still horrible, but a little better than expected. Unemployment rate came in a little better than expected. Still horrible. 14.7% unemployment. Let's look at a graph.
Yeah, those are Thursday morning, 8:30, correct?
That was today.
Today, unemployment rate. So the job
I think
numbers. Okay. I thought that was
May.
used synonymously with jobs numbers.
No, no. There's non-farm and there's ADP. Um, and the difference is the change in number of employed people during the previous month, excluding the farming industry. This is excluding the farming industry. You see, and look at that. It was hovering way down here, 3.2%, something like that. And then bam, COVID-19. The crude I was taking out at break even. I'm sorry, I gotta draw my arrows. I got distracted. Now, I went to break even because we closed above the MA1. This is one of those cases, I move my stop to break even after I get 4 ticks in profit or close on the other side of the MA1. In this case, I only had a couple of ticks in profit, but I did have a close on the other side of the MA1. So I bumped it to break even, and then it came and took me out at break even. Okay. Yeah, this is today. Oh man, something else I was supposed to do last night. But as far as all the numbers go, this is what happened. Trump was speaking. Non-farm employment change. Now, let me bring it all the way over so you can see it all. This yesterday, we had unemployment claims. Okay, non-farm productivity, unit labor costs. So those are different and less important than these. So they're anticipating 16%, and we got 14.7. They're anticipating minus 22,000. That's 22 million. Then we got minus 20.5 million. Average hourly earnings were way up compared to what they were anticipating. And building permits, better than expected. They're expected minus 20.1%. And that's Canadian, but it was minus 13. And this is Canadian too. So all the news that came out this morning was good. And, hang on, let me do this. Okay, so today I did not get my goal on the first trade. At the end of the session this morning, I'm going to go through, this is for all the people who are here who are on the open house. I'm going to go through my spreadsheet. Now this spreadsheet goes back 7 years, over 7 years, almost 7.5 now. Daily results. Okay. And I go through it at the end of every session. Right, this is this month right here. So far, I've out of 5 days, well now it's 6 days, I got the goal for the day on the first trade. Now what we encourage people to do, this is for all the people who are on the open house or on the trial, what we encourage people to do is to start with one contract. Well, first, be consistent in sim, and then start with one contract and try to get 10 days in a row of profitability before you go live. I don't use it in here, Casey. But there are other trade setups that you can use it for. All right, there's a short there on crude. I'm sorry, not crude, gold. Oops. Well, you see that down close right there with all this bearish separation is a shorting opportunity here. Now, depending where this bar closes, okay, it closed down. Gravestone Doji. Yeah, I was expecting the red up here. That's what I was thinking. I was just going to say, we'll probably get red on the YBR. And then if we get a down close after the red on the YBR, that further confirms that it should go down. We want to get down below the MA1 though. You see how the MA1's blue and headed up strong? We want to get down below that. Okay, there's the down close. That's the YBR. And now if we close below the MA1 is this red and blue line right here. Then we should have a good trade on our hands. Okay. Nothing on the euro, but the euro going down, there's the down close. All right, so we should have a good trade here. We need to get down there to get the goal for the day. Get through it. There it goes. Okay. So that short was from here down to here. Okay. Ow. Well, you see, this is a unique situation here because hang on. This bar hit the BBC. I should have probably shorted there. But I wanted to wait and see what it was going to do because of the way the MA1 was acting. But I'm sorry I didn't say all those words out loud. but when we got this down close right here, it was on the other side of the trend line. Okay, now on this down close, we still had red on the cycle, so we had a down close off the BBC. Now the arrow's not pointing in the right place, but what I was thinking is it was going to pull back up here, and I was waiting for the YBR to turn red because everything was going against. Price was going against almost everything, but not everything. And you see down here at the top how it got all choppy? That is this chop right here that we had to endure. Oh man, hang on. Let me put this back over here. There was just another short right here. No, actually, I'll draw the trend line and you'll be able to see right here. Right there. Okay, now let's put another one together. No, the cycle's going up too steep. Yeah, Mark. Could have been back here on this first one. But I waited until the second one. Ooh. There, that's better. All right, crude right now has nothing. I want to see it really start trending before we do anything with it. Okay, now usually the first thing I do is check all the trends and see if anything is trending. And the ES is starting to turn around. We'll see. Right now the cycle's flat in the middle, so we're not going to do anything with that. The cycle is the red and blue line down here. Okay. All right, so let's do this right now. Go through the trade setups. This is in the handout section of Go to Webinar. I didn't see the arrow, Joe. It's starting to set up. It's starting to set up a short. This is in the handout section of Go to Webinar. You can download this if you want to. These are the trade setup rules. Okay. Step 1 is make sure you have a trend. That's what I just did. I was just looking to see if we have a trend anywhere. Step 2, make sure the MA1, which is the red and blue line here on price, has crossed the BBC. The BBC is the green line here on price in the direction that you want to trade. Now, the direction that you want to trade is determined by the cross. If the MA1 crosses down, you're starting to think short. If it crosses up, you're starting to think long. Okay, now you're just starting to think of it because you only have a couple of pieces of the puzzle. Step 3 is make sure that you have a bar that is closed after the cross that is at least one tick away from the BBC, like right here, over here. Step 4, look for price to pull back and touch the BBC, like it did right there, like it did right there. And step 5, down here in the slingshot. Now, this is a critical step down here. Okay, if you don't have this, you don't want to take the trade. Make sure that the cycle, which is the red and blue line, for a long trade would be, well, for a long trade would be blue and well above the green line. For a short trade would be red and well below the green line. Okay, what you anticipate happening is that the green line is going to get all the way down into the cycle or all the way up into the cycle, depending on which direction you're trading. And you can see what happened with price. Okay. Now, the variation, the only variation to this is if price does not hit the BBC or if the cycle is the wrong color. Now, I should go into a little more detail about the wrong color. You still have to have the separation. Right? You got to have the right kind of separation. It's got to be bullish separation or bearish separation. But if the cycle is the wrong color, that's when the trend line comes into play. Now, you should always draw trend lines. Just get into the habit of drawing trend lines. In this case, the entry point would be close above the trend line. Over here, we hit the BBC. So when you hit the BBC, you don't need a trend line. It would be the next close down when you have bearish separation down here. And the MA1's below the BBC. And this right here is our highest probability trade setup. You see how the MA1 was red and the cycle was red, and we still hit the BBC. Highest probability. Okay, over here, the MA1 changed color on us. but the cycle was still blue and going up. So that's it. Those are the rules. And you guys can download them all right now. Step 1, the trend. Yeah, we have higher highs, higher lows, lower highs, lower lows, higher highs, higher lows. Now I'm looking from back here. We have higher highs and higher lows. I'm going to pull back and hit the BBC. The ES setting up. Yeah, it pretty much did. It's too late to do anything with it now. The Euro set up nicely though. It's too late to do anything with that either. But the Euro, if I draw the trend line properly, the Euro had a shorting opportunity right there. The ES, and it looks like it had a long from right here, but I'm not sure. Actually, no, it had a long from back here. But now it's all choppy and sideways. Didn't miss anything on gold. And crude had, just looking to see. Yeah, crude had a bounce off the BBC right here. And then it just had a momentum long trade. So crude had a long here on the bounce off of the BBC. And here it had a momentum long trade. Right there. And while I was going through that, gold just had a momentum short trade. You trail your stop behind black step line or the MA1 until the green line gets down into the cycle. When the green line gets down into the cycle, Joe, then you trail it right behind price. Okay, I'm glad you got 10 ticks out of it though. Yesterday I got 5 out of 17 possible trades. We'll see if I can do any better today. So far I have 2. Now an up close here on crude would be a long opportunity. That would be at 78. It's got a close up there though. Yeah, you were right, Huey. I just saw your question. Five out of 17. Out of the 5 I was 4 for 5. Out of the 17, I think there was 1 that would have stopped out. Good, Dave. Put your mouse away. It's the weekend. I encourage everyone, set your goal, get your goal, and then stop trading. Okay. There aren't too many worse feelings than knowing you got your goal then gave it all back. And then you have to go into the weekend with that in your head. It's something that happens over and over and over. Okay. And you don't want it to happen that way. You want to set your goal, get your goal, and then go into the weekend with a win. You don't want to think about it all weekend if you give it all back. Okay, this solid red line here, for those of you who don't know, is the low of the day. And up close on the current bar and crude is a long, right there, 25.77. And it's momentum long and it's already gone into profit. So I missed it. See, and that would have been a close. You could have actually gone here at 25.73. But I'll just say here. Because that's what I said. All right. Did you just didn't watch? There's not really a number on that, Casey, because you don't know where it's going to go. I like it when it's pulled back deeper, because the more distance you have between the green line and the cycle, the more room there is to run. So the larger their trade is likely going to be. Like, look at this right here. I want to show you something else. Hang on, I'm changing subjects right in the middle here. But like right here, you see the distance right here? You had good room for the green line to get down into the cycle. And that's what you anticipate happening, is the green line right over here on crude right now. Good enough close on the current bar, it's a long trade, and we've got a lot of room to get up into the cycle. The thing with the crude right now is the legs are getting shorter. So we're probably going to top out here pretty soon and have a deep pullback. Now, that's what I was going to show you over here. We'll start here. See, that is the leg length that was established. Now, usually, that is going to be repeated at least once. Okay? It almost got repeated, but not completely. See, now the cycle's going up too steep on the euro to go short. Even off the YBR with red. It's still going up too steep. But, what I was talking about with crude, about the legs getting shorter. You start off with a leg that went from here to here. Here, let me drop. There to there. Then the next leg went all the way up to there, but it didn't short the steps. So, that's an exact copy of the leg. So what should happen on the next trade? Well, it should go like that, but it's not gonna. I don't think. I'm not gonna trade it either way. But while I was showing you that, there was just a short right here on a close on this. Not short, a long. Long means buy, by the way. It is the S1 Fast. S1 Fast, right? I know what you're talking about. Ninjatrader 8, it looks totally different. The way that they set all the defaults and everything else when we had the code created. I wrote it all originally. I wrote it all in TradeStation. Then I converted it to DT Pro, and then I took that and sent it to a consulting company to get it converted to NinjaTrader. And they did a great job with NinjaTrader 7, but when I took the NinjaTrader 7 code and sent it to them to get it converted to NinjaTrader 8, they messed it all up. Your previous question on gold. Hang on, let me go see what it was. The recommended gold, Christopher, $100 a contract is what we recommend. And the goal is to make $100 a contract consistently. And once you do that, you can start adding more contracts. But you got to add more contracts with your profits from your previous one. Look, it did do it. I didn't think it was gonna, but it did. Okay, hold on. Is that I didn't enter on the bar after the trend line. You could have entered on that one that I did back here. Back here. You could have actually entered on this bar right there. Okay, I didn't, when I was watching everything going on, I didn't look down here. I thought the cycle was going to turn blue. I thought the cycle did turn blue. So I waited until we got the close below the trend line right there. Okay, here's another long trade right here on gold. That's no trade there on crude. Nothing on the ES. Yeah. Okay. Why that bar? Well, I was waiting for a close below the trend line. Is what I was doing. I thought the cycle had turned blue. And so when it does that, you need to close below the trend line. And this is a unique situation because if you hit the BBC, and the cycle is the wrong color, and I thought it was, but it's not, then you don't move the trend line anymore. So I was waiting for a close below the trend line. Now the bar I got out, I just set a target of 10 ticks. That's all. Okay, yeah, Ray, I know they mixed everything all up. NinjaTrader 8. It frustrates me because I have to set everybody up. I meetings all the time to set people up on NinjaTrader 8 and get it to look like this. And we have a lot of people in NinjaTrader, and they're sort of forcing them to go to 8. And 8's a lot more work just to get it activated. It's more work. 26. Now the cycle's going down too steep. But we did do the leg length. We exceeded it, so it should do it again. That would be the fourth one, the fifth one. Yeah, it is, Dennis. It was for a short, yes. And I did the conversion of our meeting yesterday, so I have to send that to you. Oops. What did I just do? What did I do? I'm sorry, I'm looking at my emails for the first time today. I love people like D-Quick. D-Quick, if you're in here, I'm going to dismiss you. You are. Look at that. Get so angry about free stuff. The download for what? DQ.
John has that question that.
Yeah, John, you can go and buy it. Okay. When they realized how many people were using it, they gave it out for free for Ninja 7, and I took it and I was giving it to all our Ninja 7 people. And when they realized how many there were, they decided to put a price tag on it. You can go and buy it for $75. Just look it up. RJ range, no cap. Google it. Oh, here, I'll do it for you. DQ.
I think the range is no gap is $75.
It is $75.
Okay.
That was for Alex.
Okay.
Oh, I did not come up this time. No gap range bars. Yeah, here it is by RJ. Ninjatrader 8 only. That's what he thinks. It's Innovative Trading Solutions Online. Copy. Here's the link for it. Hang on, Huey. There's the link. That's for Ninjatrader 8 people that want the no gap. We're gonna have a short on a down close here on gold. 25.7 down to 25.3. It'd be a shorting opportunity. And on the euro, yeah, that's a momentum long trade. Okay, so now the gold is probably not going to happen. So I'm going to cancel the order there. And over here, 84.50 on the euro. It's a momentum long trade. If you didn't get into it, it's too late to get into it. Okay. Now I canceled the order on the gold, but it's showing a short right here. I mean, the black step line is crossed up above the BBC. So if you didn't get into it, I wouldn't get into it, but it's still showing a short right here. And it wants to get down to 24.9. But we got some numbers to take out up above first, it looks like. Well, okay, and over here on the euro, we had our momentum long trade. Did put in a little bit higher swing. Yeah, that's what I was afraid of on the gold. Now 25.9, but it's still got some numbers up above. It's going to take out 27.4, possibly. Over here on the euro, we need this bar to close to finish drawing the trend line. Okay, we don't have anything on crude. We don't have anything on the ES. You're welcome. That's a good question, Dwayne. I haven't seen it in a week and a half.
Well, it's the volatility. The 2-point stops just won't work right now in this environment.
Then we should refund some people. Can't do it.
Hey, good morning, guys.
Good morning, Dwayne.
Morning, Dwayne.
Hey, Val.
I'm surprised you were able to get in. Okay. Sorry, I had some I needed to take care of right away. All right, so
Great to
down
see so
close
many
right
people here today.
now. It is. It is indeed. A down close on crude right now would be a shorting opportunity. It'd be a momentum short, 73 down to 69. If we got the down close there, that would be a momentum short. Okay, we didn't get the down close, so now we're gonna have to draw a trend line. Okay, but we'll wait until this bar closes. But it's gonna be like this. Okay, so now a down close on this bar would be a short right there at 25.66. If it were to close down, yeah, that's the whole bar right there. Okay, you see it didn't close down, it closed up. So now we're gonna have a new trend line, one that goes like this. Now, the reason I drew this trend line, I drew it from this swing low across this corner, and if we would have gotten a down close, it would have been a close below the trend line. Remember, the variation is if price does not hit the BBC is the green line here. If price does not hit the BBC, then you need to use a trend line. Or if the cycle is the wrong color, and it is right now, then you need to use the trend line. So now we've got 75 down to 71 would be a short. Okay, and there it is. It was a down close right on the trend line, so that was a shorting opportunity right there at 71. And it's gone from 71 down to 67, so it's gone 4 ticks in profit. Now if we get the down close here at 67, we should have a good run. But we've got to get that down close first. And you should already be in the trade. And your stop should be a break even. And there's the down close at 67. Now the reason I say that that should be a good run is because we closed below the MA1, this red and blue line right here. See, and it closing back up above right there like that. It indicates we may be getting into some chop here. Either way, your stop would be a break even, and you may or may not be out right now, depending where you actually got in. I didn't get in at all, so I was talking about it. How to get the margins. Me and after the meeting last night. Yes, Dennis. The long is setting up on the euro. Vic, what was the red flag on the gold short? The setup seemed right. Over here, the black step line was about to cross up. That's the thing that concerned me. But yeah, you were right, Dennis. Over here, on the euro. There was another long trade right there. There it goes. There goes crude. That's what I was expecting. You see now the green line's down into the cycle, so it should pull back and try to do it all over again. Over here on the gold, this all happened a few minutes ago when I was doing something. Hey, don't say yourself short there, Dennis. Travis. It's all the same. It works the same. It's just a lot slower. Yeah, fewer trades. I mean, like right now in crude, in the last 6 minutes, we had a trade right here, a trade right here. Yeah, well, 2 trades in the last 6 minutes. No. This one was there. Oh, I'm actually in a trade. I didn't even know it. Man, where am I in from? 25.71.
So the non-farm payroll came in better than expected.
Yeah, it's still horrible, but it came better than expected. So that's plus 30 right there. See, I'm in from back here at 25.71. So my stop is at plus 30 right now. Oops. I was going to say, why didn't I get in any of those? And I actually did and forgot about it. You're on the wrong contract, William. So I did actually get into this. No. 25.71 down to 25.41. Actually, right away. Where it took me out. Okay. There's a short trade here on gold that I'm not in. There was one right over here that I didn't get, and then it should have put in a lower swing. So this is not a trade right here. This should put in a lower swing right here. And see, as the green line gets down into the cycle, it's time for it to pull back. So we want to see. Yes, that's why, Mark. There was a trade set up there, right here. I'll show you. I'll draw it for you. There's the trend line. Here's the short. Now, this should have put in a lower swing right here. Okay, should have put in a lower swing, but it didn't. And it still hasn't. And why are the bars so much bigger on the ES chart? You can change that just by going like that, or like that, or like that. Oh, that's right. I forgot we said after an hour. Yeah. Okay, Dwayne, you want to take it right now? I mean, I'm plus 30 on gold, crude, and plus 10 on gold. If you want to jump in and do your thing now, that would be great. We have a lot of people here today, so that would be great. So guys, this is what I do every morning for 2 hours every morning. Now we're gonna do something a little bit different today because we have an open house, and there's a bunch of people in here. Dwayne's gonna take it now and go over Concierge trade alerts and the Logic 24/7 alerts and go through that. Okay. All right, and Alex, how's 1:30 this afternoon sound? Okay, I'll send you a link.
All right, guys. Good morning. Okay, right here on gold, this is a 30-minute chart. Now, I know that a lot of you in the mornings, when you try to follow Michael's using a range chart. That's the chart that we use to teach you the methodology and the strategy, because it enables Michael to be able to show you multiple setups over a 2-hour session. With 30-minute candles, you might see 1 or 2 or maybe 3 trade setups over the course of the entire morning. That would take you a long time to learn. With the range chart, because you get to see so many examples each day, hopefully that repetition allows you to grab a hold of the very simple strategy and methodology. When you're new, it sounds complicated. It sounds like there's a lot. There really isn't a lot, and it's the same thing over and over. Now, on this chart here, we had a bearish cross, okay? That's when the red and falling gets below the BBC, the green line. Price pulled away, price pulled back to physically touch the BBC. Now we're printing a red candle. This is how markets move. Leg, retrace, leg, retrace. So the next high probability move from where we are right now is down to the weekly trading zone, which is 1720/21. Now, these zones are issued to all of our members every Monday morning at 6:15 a.m. Eastern. We've been publishing them since December 14th of 2009. So based on the 30-minute chart, based on the same methodology and strategy that Michael employs, what I'm looking for is a move from where we are right now down to this zone at 1720/21. We've got a full green candle here, all right? So there's no obvious friction or obstacle in my way. So an entry, you can jot this down, about 1724. I want to get below the low of this candle. I want the market to show me that it's actually serious about trading lower. And then 1724. Okay. All right. Entry 1724. Target would be the zone 1721. That's the final trade 2 target. Gold pays $100 a point. Every $1 move in gold pays $100. Every $1 move in crude pays $1,000. Now, as I said earlier, in the mornings when Michael is, going from market to market, jumping from chart to chart, some say, well, man, I have a hard time keeping up. Well, trading off a 30-minute chart, it's the flip side of that same coin. This might put you to sleep. But the good news is you don't have to sit and stare at the chart all day long. I mean, it's a 30-minute candle. So we've looked at gold. We know where we would like to enter the market. Why aren't we entering here? Because price is above the BBC. Now, as long as price is above this green line, we're bullish, and per the strategy, we anticipate higher prices. As you can see over here, when we're below the green line, we anticipate lower prices. And then as price crosses back above, this was a little head fake. Looked for a minute like it was going to make a run at the zone overhead, but the move failed. We came back down to test support. Okay, you always look left, because the trade 2 target is always the weekly trading zone below on a short, or on a long, it's the zone above. But you always look left, because as price was coming down trying to get to this weekly trading zone, it couldn't get there. Buyers came in, they liked this price, they ran it up. So as you're coming down here, while you're thinking my trade 2 target is this zone at 1681/82, I know I have an obstacle in my path. Okay. Here on this short move, we have no obstacle in our path. We've got red and falling, which supports a down move. And down here on the slingshot, we've got red, and we're below that 50-yard line. Now that 50-yard line, I usually make all of mine white. White, okay. And white, okay. Those colors on the 50-yard line don't have any bearing with this strategy. It's just a holdover from a previous indicator that Michael had built. So this supports lower prices. Red and falling supports lower prices. So we know what the next high probability move is, but the market doesn't always do the next high probability thing. Currently, we're above the BBC. We can, along with setting up this trade, 1724 to 1721, that's 3 points. That's $300 per contract traded. Now, price is always trying to get to a weekly trading zone. When price is above the BBC, it's trying to get to the zone overhead. When it's below, trying to get to the zone below. If price refuses to fall, does that mean we don't have a trade? No. If price is above the BBC, that's the first initial stage of price saying, hey, I want to go higher. From the moment the market's open at 6 p.m. Eastern on Sunday night till the markets close on Friday afternoon at 5 p.m. Eastern, price is on a mission. It's trying to go somewhere. When the market gets flat like this, what you've got is you've got a battle going on between buyers and sellers. They're duking it out. You know, you're up, you're down, you're up, you're down. Unlike here, where buyers are clearly in control of the situation. Now, this was an alert, Concierge trade alert, to be long. Yesterday, I went over this in yesterday's radio show. Consider being long 1703. Okay, so from 1703, we went to the zone overhead. That's a 17-point move. That move right there is $1,700 per contract traded. Every one of our members, every one of our passport holders got the alert. They get the alerts every night. Okay, try to get them out 6 p.m. Eastern or shortly after the Globex Open at 6 p.m. Eastern. So again, whereas Michael's style or the chart that he uses, the range chart, is a little fast paced for some. You see what we're dealing with here? Okay. Patience. One of the most valuable tools you'll have in your trading toolbox is patience. We're not all born with it. Sometimes you got to work at it. Okay. You got to learn to exercise discipline. So we can go look at another chart right now, because if this thing is going to come down and trigger us in, yes, it could happen in one fell swoop, but it doesn't seem to be in any big hurry to go anywhere right now. If buyers were to come in and start driving this thing up, then we would look at a trade up here, something along the lines of 1732 to 1735. From 32 to 35, that's a $300 per contract trade. But for now, we're going to keep our eyes on the short side until buyers and sellers settle this little dispute. You can see we're about the halfway point between the zone below and the zone overhead. So that's gold. Does anybody have any questions on anything I just said about gold? Now, for those of you that don't know what the Concierge trade alerts look like, I'm going to show those to you right now. Okay, these are the alerts that came out last night at 8:10 p.m. Eastern. This is a static report. These numbers are good for the entire session. On most days, these alerts will trigger multiple times during the session. On the S&P last night, well, let's look at gold. Gold, we had an alert to be long last night at 1732. Price, 1732, came out at 8:10 p.m. Eastern. So let's look at that. Let me adjust this chart so you can see it a little bit better. There we go. Okie doke. And I was doing a lot of explaining last night in the workshop, so the stuff we don't need, let me get that off the chart. Well, I should have pointed out what I was saying is that we were looking for a pullback to the BBC, which we got, then a move to the upside, which is, as you can see, what happened. Okay. So last night's alert came out at 8:10. So that's going to be the 2000 candle right here. So 10 minutes into the life of this candle, the alert came out to be long 1732. So let's draw a line at 1732. $32. On this first move up here, we just touched 32. Now, what most traders do is they'll wait to see how price is going to react once it gets to the trigger. You can go to a smaller time frame and look for an actual trade setup. I'll show you how that works. Now, When price can't get through an area, resistance, it will come back looking for support, which we found here at blue and climbing. So we walked the back of blue and climbing, and we walked right back up to the trigger. And from 1732, we traveled up to 1735, the weekly trading zone. When we approach a zone from below, we expect it to be good resistance until it isn't. Now here's the move down on gold, okay? The move we were looking for from 1724 down to 1721. The swing low so far is 1721.80. So it already made $200 in profit available. We'll see if it's going to, now this is important. Okay, if your goal is 2 points a day, well, of course you already had that. The trade made 200 points available. If it touches 1721, then that will make $300 per contract available. Once you earn the right to trade 10 contracts, then a $300 move becomes a $3,000 move. But we're we're real sticklers for that earning the right to trade a certain number of contracts. When you start out with us, you're going to be in SIM. You're going to be in SIM until you can prove yourself consistently profitable 10 days in a row. We want you in SIM to reach your daily goal 10 days in a row in 10 trades or less before you go live. Once you put together your 10 days, our blueprint will give you the blueprint will give you the green light to go live with one contract. Now your goal is, with that one contract, is to increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. Now, what's very different about the first contract and the second contract is the first contract, that came from your savings, under your mattress, wherever you get your money. But the second contract is being added with profit you earned in the market. That's a game changer, okay? When you add that second contract with profit you earned in the market, well, you are on your way to building. That's the first step in building a successful trading business. Now, there's a question in the chat box. Let's see. Do you use a slingshot on a 30-minute chart? Well, as I pointed out, the slingshot was perfectly positioned for a short trade. We had red below the 50-yard line. That's just as bearish, as it can get. Now that we're at the weekly trading zone, why did I make the target 21? Why not lower? Why not this swing low here? Because we expect the weekly trading zone to be good support till it isn't. Over here at 8:30, we had a news-driven event that caused price to spike below. But as you can see here, once we entered this area, we've gone from zone almost up to the zone, didn't quite make it. Then we finally made it to the zone, got down to the zone. And the reason we didn't get up to the zone here, there's actually a reason. We ran into the BBC, the green line. When we approached it from the bottom, when we come up and hit it, we expect it to be good resistance, just like it did. When we approach it from above, we expect it to be good support, as it was. And then we just rode the back of blue and climbing right up to the zone. Now, you've got a trigger sitting up here, and you know that we didn't cross the trigger here. We did pull back to the BBC. We printed a green candle. We got above blue and climbing. So at this point, once you're comfortable with the methodology and strategy, you don't have to wait for this trigger. You can get long here, your stop loss would go right here, just below the swing lows of these candles. So you go long here at 1728. By the time you get up to the trigger at 32, you've already got 5 points under your belt. And then here comes another 3 up to 1735. So entering here ahead of the actual alert, because the market is showing you what it's trying to do. It ran up to the important price, important area, couldn't get through it. Came back to the BBC for support, which it found. Closed above blue and climbing. That's bullish. Down here, this is red, but it's above the 50-yard line. I put more emphasis on the placement of this than I do on the color. Would I prefer to have it blue and above the 50? Sure, but we don't always get what we want. As long as it's above the 50, I consider that bullish. Once it drops below the 50, I consider that bearish. Okay, so you see what's happened here. We came down to the zone, found support, and now buyers and sellers are locked in another struggle. Who's going to win? Well, we already accomplished what we came to do with gold, so let's look at a different chart. Here's the S&P. Okay, last night, the alert that went out was to be long 2903. We triggered 2903. We triggered 2903, and we ran up to the swing high was what have I got in the way? Swing high was 2923. From 2903 to 2923. It's 20 points at $50 a point. That's $1,000 per contract traded. Getting out of a swing high is very difficult because you don't know it's a swing high or a swing low until after the fact. So we have what we call the exit signal. Price triggers 2903. It starts to move higher. You'll notice the step line is on the left side of blue and climbing. As this move starts to kind of run out of steam, the step line crosses over, gets on the right side of blue and climbing. What we're looking for is this right here, okay? On a long trade, once the step line crosses over, the first red candle that closes below the step line, that is the exit signal. So the exit signal on this trade was 2912.75. 2912.75. So with an entry at 2903 up to 2912, that's 9 points at $50 a point. That's $450 per contract traded. Now let me look back at the chat box. Any questions? Okay, looks like we're covered on questions. Okay, so what's happening with the S&P right now? It's going sideways. There is honestly there's nothing here that I would want to get out of bed for at the moment. Price is just kind of tied up in a knot. We are below the BBC, so the high probability trade from here would be 2902 to 2900. 2902 to 2900. It's not as clearly defined. It doesn't have the definition that the gold trade had, but it falls within the parameters of our setup. So 28.99 to 2900, that's the weekly trading zone that was sent to everybody, to all of our members, Monday morning, 6:15 a.m. Eastern. Actually, I was running a little late this Monday morning. So 2902 down to 2900. Let's go take a look at the Dow. The Dow most likely will be giving us a similar scenario. Last night's alert was to be long, 24055. Here's the trigger. Now, important prices, important areas are almost always tested. Did I go over that on the S&P? Well, I should. We triggered here, then we got back below the trigger right here, but there's a huge difference between these two trades. Okay, this long is supported by blue and climbing. Think bullish. Over here, when you trigger in at 2903, you do have some room to run up to 2908. So there's about 5 points of room to run before you get to red and falling. And even though price did manage to eke its way through red and falling here, you always want to think that that's going to be potential resistance, like driving into a brick wall. So could you have still triggered in at 2903 with a goal of about 5 points? Yes. And your risk would be just right here, right underneath the low of this red candle. Okay. So back to the Dow. Last night's alert, 24055. The swing high was 24167. So we'll call it 100 points. All right, 24055 to 24. It's a little over 100, like 110 points. So that's $550 per contract traded just by following the alert. You don't have to do anything else, just follow the alert. But you can't get out at a swing high unless you're just real lucky all the time. However, the exit signal right there, the exit signal, the price of the exit signal, 24124. 24124. Exit signal. So once you have your order on, then you have to make a decision. Am I going to just take out my daily goal, whatever that is, when it makes itself available? Or if it obviously is becoming an extended move, am I going to wait for the exit signal? And the exit signal can never get you out at the swing high or swing low for the reasons I just explained. So you got to get over that psychological hang up that some people will have. Man, I can't believe I left all that money on the table. Never think like that. Well, think about what you took home. That's what matters. What's left on the table? Hey, leave that for some. Let somebody else have that. Okay. Over here, we're just tied up in a knot. Okay. 1 minute, we're not 1 minute because these are 30-minute candles. We're below the BBC, then we're above, then we're below, then we're above. This is not conducive to putting on a trade. The ES, it's battling that same kind of thing, just not conducive for putting on a trade. I think my words were, that's not one I would want to get out of bed for because there's no real setup. Here, you had an alert trigger. Here, you had a pullback to the BBC. Those are valid reasons for taking a trade. If we scroll back to the previous day's alert, which was to buy 2860, it ran up $1,700 per contract. The exit signal was this candle right here. The closing price It's 28.72 and a quarter. So that's 12 points at $50 a point. Entering here per the alert, exiting here per the chart, per the exit signal, $600 per contract traded. The Dow, we've covered that. Really nothing else. What we would want to see is we'd want to see price pull away from all of this noise and then do this, pull back to the BBC. If price can pull away, the BBC is going to follow it up. And at some point in this journey to the zone overhead, because remember, price is always trying to get to a zone. If it's above the BBC, it's trying to get to the zone overhead. When it's below, it's trying to get to the zone below. And when it's showing you that it is confused, that it has no clear path of action yet, then you just have to let it go. Wait for it to show you something that is obvious. Here, we had a nice pullback to the BBC. We spiked it, right? So on this pullback, we would have never gotten long on this because it didn't hold. But when it got down to the zone, it held, which sent us back up. And then once we closed above red and falling, okay, all we had to do was get long for the trip up to the zone overhead. That's always the trade to target. Okay, Russell. Last night's alert for the Russell was to be long 1303. And this is 1303 right here. And the exit signal on this one came at 1304.40. So nothing to get too excited about. If we draw that across, because we do expect multiple triggers, on this trigger of 1303, we made it up to 1318. That's a 15-point move at $50 a point. That's certainly worth getting out of bed for. Now we're printing a green candle. Okay, what I'd like to see is price pull. Now that we've pulled away, we got a little space there. I'd like to see price pull back to the BBC, start printing green, and then catch a nice ride up. We'll have to wait and see if that happens. Let's go to the NQ. All right, last night's alert on the NQ. Let's consider being long 91.70. Here's 91.70. The swing high right here, that's a 65-point move at $20 a point. That's what the NQ pays. It's $1,300 per contract traded. But again, see that little dash of red right there? Price closed below the step line. Actually, there's a little flash of red right there. See that? Okay, the step line, when the trade starts out, you're on the left side of blue and climbing. Step line crosses over. You close below the step line. The closing price is 92.03. 92.03 minus 91.70. Now that's 33 points. So we'll call it 30 at $20 a point. That's $600 per contract traded by simply following the alert, getting long, and taking your exit at the exit signal. Now, let me say this again. It's very important that you trade in sim until you become consistently profitable. That's not just with our methodology or strategy. That's with any methodology, any strategy, any indicators that you ever use. It's critical to your success that you first become consistently profitable. And some people are going to tell you, the people who aren't profitable, they're going to go, oh, well, that's just craziness because it's not real and blah, blah. Well, you know, that's exactly right. It's not real money. And there's no reason to put your real money that you worked hard for at risk. No reason to put it at risk until you first prove yourself consistently profitable. Because even after you do that, once you go live, you're going to have to deal with all of the stuff that comes with going live, all of the emotional battles, things that go on in your head, the noise between your ears. You need to have that consistent profitability on your side so that you can, when you go live, you don't have to worry so much about the strategy as you do about just dealing with the noise between your ears. Ray says, to a newbie, this is all very overwhelming. Okay. Well, let me try to make it simple. Ray, think of it like this. Let me go back to this. Was such a big move. We got to go back to where it started. Okay. When you have a bullish cross, just remember this. Okay. This is all you got to remember. When you have a bullish cross, wait for price to pull away from the green line. You see how price pulled away from the green line? Okay. Bullish cross, price pulls away. Price pulls back to physically touch. Up close. Up close simply means a green candle. Go long on the open of the next candle. And this move just kept on giving. It pulled back to the BBC again here. Price always reverts to the mean. In our case, the mean is green. Okay. So price, it's going to put in a leg and then it's going to pull back. It's going to revert to the mean. It's going to put in a leg. It's going to pull back. Okay. This is a continuing up move in the market. And then you hit the trigger at 91.70, which we've already covered. Then when price pulls back to the BBC, same thing. Price pulls back, touches the BBC. You start printing a green candle here. You can wait for this candle to close and enter on this one. You can be aggressive. You can enter as this green 30-minute candle is building, you know, as long as price is above the BBC, knowing that your obstacle overhead is red and falling. So if you get in at 91.82, you know, by 91.92, you've got 10 points at $20 a point. That's $200 per contract traded. Caesar asks, what about micro contract after sim? Is that better than moving to the mini? Well, you can certainly do that. That's not a bad idea at all.
You don't have as much on the line when you do that. You know, 10% of what you would normally have.
On the alerts, we do not want to risk more than $300 per contract per trade. There's a question about how big of a stop. I teach each member the 3-step methodology for stop placement. We address the chart, and if we cannot find, based on market structure, the proper place to put the stop loss that risks $300 or less, we pass. What? You pass? We pass. Because most of our alerts will trigger multiple times. We just wait for it to trigger again. And when it comes back, and I'll show you an example on the ES. Let's see. I know most people like to trade the ES.
And the ES has a micro.
And the ES has a micro. Okay. You got an initial trigger, selling 27.82. Got another trigger, you got another trigger. With each one of these triggers, the risk, based on what I teach you about market structure, you got less and less risk on each one of those. Up here, this was a short at 28.50. Now coming down, this first trigger might require considerable risk, more risk than you want to take. But once you get over here on this trigger, there's hardly any risk at all. I mean, there's risk. Remember, we don't want to risk more than $300 per contract per trade. Gold looks like it wants to get through that weekly trading zone. Okay, so how do we deal with that? Well, let's see gold take out that swing low, and then we would have an opportunity from about 17, we'll call it, down to 17.15. That's being very conservative. So that'd be a nice little just 2-point clip right there. 17 to 17, 15. That's gold pays $100 a point. So that's $200 per contract traded. So let's take a look at crude. Crude's another one that folks like to trade a lot. Okay. And we're tied up in a knot. There's just nothing really inviting here right now. The last thing that happened was a bearish cross. Price pulled back up to the BBC in this very jagged fashion. But here you can see price is clearly moving higher. Okay, so that's conducive to this long. We had an alert, be long 2670, and the exit signal came in at 2739. So that's about a $600 per contract move. Over here, we can clearly see prices moving down. So these are the markets we want to be trading. Moving up, moving down. But when it starts to go sideways like this, hang on to your cash reserves, because you want to have dry powder, as they call it, when you have this kind of opportunity and this kind of opportunity. See over here where it's tied in a knot? So our indicators do a really great job of not only getting you into a trade, but they also do a great job of keeping you out of a trade. I don't know how many soybean traders we have, but this is an opportunity to, because it's a real clean chart. We had a bullish cross here. Now, a bullish cross, what that means simply is when the blue line gets above the green line, that's a bullish cross. That means we anticipate higher prices. And when the red line gets below the green line, that's a bearish cross. We anticipate lower prices. So we had a bearish cross. Price pulled away from the BBC. Price pulled back to physically touch. We had a down close, red candle. Now, your job is to simply sell the open of that candle and take, whatever profits are available. If you're trading to a specific goal for the day, that you set your bracket order accordingly, or you trail your stop, however you choose to do it. Now, once price starts pulling back to the BBC, okay, question should be, all right, am I going to have another opportunity to short this thing? You see, here on this entering on this candle, you were complemented by red and falling. But over here on this pullback, blue and climbing, that's bullish. That represents support. So you don't want to go short here and it never gave you a short signal, because you would be, again, driving into a brick wall. And if it were further away, then it might be okay, but there's just no reason to go short here. Nothing on the chart says go short. So we get a bullish cross. Here we had a bearish cross, beautiful shorting opportunity. Here we got a bullish cross, price pulled away from the BBC, price pulled back to physically touch. We got an up close. Now this very next candle went red and pulled back to the BBC. Now what you can do is you can watch, see, when we pulled up the high, that swing high, it's right there. Right there. Okay. So the market puts in a leg, pulls back to the BBC. Now, as soon as you start printing this green candle, because it takes 30 minutes for this candle to unfold. As soon as this thing starts building a green candle, you could go long, knowing that there's a potential obstacle overhead, the previous swing high. So if you entered, you know, whatever profit was made available is available. Price then comes back, touches the BBC again. This time it leaves this long wick sticking out below the BBC. That is a very bullish candlestick signal. I have a little PDF called The Secret Life of Candles. If you get a hold of Valerie, she'll tell you how to get a copy of that. There's about 200 different candlestick signals, and candlestick signals are not the latest thing to come down the pike. Japanese rice traders have used them for hundreds of years. There's about 200 signals. Some of them are so obscure you might see them once or twice in your lifetime, but there's 10 major ones that you should focus on. This being one of them, okay? This wick sticking out below the BBC, and then this green body tells you the market is definitely gonna try to go higher. You've already seen price fail to take out that swing high. So what you might do in this case is you might let price take out that swing high, and so perhaps your entry comes on the open of this candle, which that candle opened at 840 and it ran up to 848. That's 8 pennies at $50 a penny. It's $400 per contract traded. Okay. Now, if you waited for the exit signal, that would be this candle right here. Okay. Now, we're running short on time. Let me look at these questions again. Casey asked, can you set up the trades on Ninjatrader and let them trigger as you're sleeping? You can, Casey. Everyone loves the idea of set it and forget it. You can establish a bracket order that has your entry, your target, your stop loss. The only issue, let's say you've got an aggressive target and price gets halfway there and starts to fail. If you're in front of the screen, you can still exit and protect your profit. But if you're sleeping, you can't. So really, it comes down to a matter of, you know, personal preference. So can it be done? Yes. But because the market offers so many opportunities, especially of late with this increased volatility, you know, everybody's going to do what they want to do, and I understand that. But my best suggestion is try to be awake and in front of the chart when you have a trade on, okay? Until you get consistently profitable and are very comfortable with what you're doing. Steven says, as an engineer, I'm always looking for ways to improve things. I'm looking at soybeans with Mr. Reeves. The blue line started at about 834 and ends at 847. Why not trade with the change of color? It looks to be more profitable. Just thought We've been working on this for 15 years, Stephen. You're seeing it for the first time. So I'll just leave it at that.
And really, that's a
Wow.
pit you don't want to get yourself into. Don't try to reinvent the wheel. You know,
Yeah,
we did that for years. We did that for years.
We got more wheels around this place.
Yeah, we'd
got
stay
square
up, Dwayne and
wheels.
I'd stay up all night long, just looking at things and
We got
figuring
square
things out.
wheels,
Yeah, we got square
diamond
wheels, we
shaped
got
wheels.
rectangular wheels.
Yes, Jacob, every trade has a target. Jacob says, what about targets? Maximum loss is 300. Do you issue targets? Every concierge trade alert has a trade to target. It's the zone overhead on a long. It's the zone below on a short. And on the Logic 247 trades, which I will show you very quickly here, we are in week 92. And I'm going to show you where we're at. All right. Now, what we just went over were the concierge trade alerts. Okay. Those are based on historical price action. The Logic 247 alerts come around the clock, 24/7, whenever opportunity presents itself. So far this week, week 92, we've had a total of 78 alerts, 12 never triggered. That left us with 64 actionable alerts. 2 are still waiting on a disposition. 3 stopped out. So this week, 5% of actionable alerts were stopped out. And let me show you what the Logic alerts look like.
The other side of that is 95% of actionable alerts hit their target.
That is true. We say it the way that we say it because everybody else does it the other way. And some of the numbers that some of these people put out there are just, it's an insult to your intelligence. And we don't ever want to do that.
Yeah.
We just want to deal straight with you, be very transparent.
Anybody that says, you know, 100% wins, you know, you just go to another website.
They're lying, yeah. You don't have to shop with us, but man, shop somewhere else. Don't shop with somebody that's going to just lie to you the second you land on their website.
Yeah.
So last week, week 91, we had 87 total alerts, 4 never triggered. That gave us 83 actionable alerts. 8 of them stopped out. So last week was 10%. We've averaged over the past 92 weeks, 20% stopping out on any given week. Now the Logic alerts, as I said, they come out round the clock. We started Sunday night, 6 p.m. Eastern. This was, you're seeing Pacific time. I'm in Phoenix, and so I'm on Pacific time 8 months of the year. At 6:05 p.m. Eastern, or 6:05 p.m. Eastern, we put out this trade on the S&P. Thumbs up means it found the target. Z's means it never triggered, and a red X means it got stopped out. Now, again, these are the Logic alerts, which are based on current price action, opportunity as it develops. The concierge alerts are based on historical price action. So along with having the alerts, Michael is also teaching you the trade setup so that you can go find these yourself. So the goal is that at some point you don't need us anymore. You just load up the chart and you go find your own opportunities, because every one of these opportunities is based on the exact same criteria. So here's the Dow, the Russell, NQ, crude, gold, S&P, Dow, Russell, NQ, crude. There's a crude that didn't trigger. Russell. See, now we just rolled into Monday. That first batch was Sunday night. We had more trade opportunities Sunday night than some people might have all week. So there's a lot of opportunities available. That's why never trade anything other than the highest probability lowest risk opportunity that you can find. No reason to, throw your money away. And any problems that you're experiencing in your trading, throwing money at the market won't fix it. The only thing that will fix it is learning how to trade. 9 out of 10 new traders fail. It's a pretty depressing statistic, but it's a fact. When I read that in 2006 in Futures Magazine, I had just started trading futures. In 2005, left equities, came to futures. Well, reading that in an industry, trade magazine was, but they didn't tell you why in the article. They just went over the numbers. So I decided to find out why. Well, it became pretty evident. The reason 9 out of 10 fail is they had nobody to teach them how to do it. If somebody gave you a brand new airplane, chances are you would not climb into the cockpit and try to fly somewhere until somebody first taught you how to fly. Otherwise, it'd just be kind of crazy. But yet, every day, people watch some video on YouTube or land on some scandalous website, and the lazy man's way to riches. So they fill up an account with money, off goes that wire to Chicago, and well, you know how that story ends. It doesn't have to be that way. You can learn how to trade. I can't promise you that you're going to learn how to trade, but I know that it's possible for a human being to learn how to trade. Now, learning from a book, that can happen. Watching historical videos, that can happen. But having real-time alerts, opportunities that are right here, right now, developing in the market, along with a live instructor that you have access to. Every passport holder has unlimited access to one-on-one mentoring sessions with myself and with Michael. You just go to the website. Once you become a member, you book your session. And if you're on the trial, you can book a session while you're on the trial. Okay. 9 out of 10 traders fail. If 9 out of 10 fail, that means, I guess, if my math's correct, 1 out of 10 actually succeeds. Go find that 1 out of 10, ask around, find one, and then just ask them this question. Did you by any chance have a teacher when you started this? 9 times out of 10, the answer is going to be, well, of course. How else would I learn? See, that right there points out the difference in how different people think. Some people look at this and go, oh man, that looks so easy. I'm a really smart person. I can do that. Whereas 1 out of 10 people looks at it and goes, whoa, that's an incredible opportunity. I better go find somebody that can teach me how to do this. See the different ways of thinking? So today you get to choose which way you want to approach the business of trading. I'm going to turn you back over to Michael. He's got to go through a few things, wrap it up, and then I'll see you all at the top of the hour. We do a live 2-hour broadcast from 12 to 2 p.m. Eastern. Thank you all for your time today, and I'll see you at the top of the hour.
Okay. All right. Now let me grab the charts again. And I will show everybody how to get into that session right now. All right. To get into the next session that starts at the top of the hour, go here to the home page at CFRN.net. Hang on. Let me find it. I don't have it open. Okay. Here, we'll do this. Go here to the home page at CFRN.net. Right over here in the right-hand column, it says, if you want to take a free trial, it says apply.cfrn.net to take the free trial. But to get into the next session, scroll down to the big microphone, click on that, then just follow the instructions. Just come down here. You can click this link or click Watch Live Now. Either one of them is going to register you for the next session. There's no password required, and it's free. And next session, we'll go over all the stuff that we did today. Now, the spreadsheet, that's what I wanted to go over. Hang on. I'm going to drag this over here to get to it. At the end of every session, I fill out the spreadsheet, and the spreadsheet goes back just about 7.5 years to January 2nd of 2013. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Now, I fill this out every day at the end of our trading sessions. Now, what I did during the day. Okay, today's the 8th day of May 2020. We made 30 ticks in crude, 10 ticks in gold. So we're up $400 a contract on the morning session. And I missed, I mean, if you watched the whole morning session, you saw that I missed a whole bunch of trades. And I'll go over those in the next session. Today it took 25 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 3 trades today. So on the month now, we're up $1,667. That's over 6 days, averaging $277 per contract per 2-hour day. Okay, and I'm missing. I don't know what percent I'm missing, but it's got to be between 80 and 90% of the trades. On the year now, we're at $32,002. That's over 84 days, averaging $380 per contract per 2-hour day. Yeah. Here. Copy the link. That's the link to this spreadsheet. Okay. And that's it. We're going to wrap it up here for the morning session and for the open house. Thanks for coming, everybody. I hope you all have a great weekend. If I don't see you at the top of the hour, I hope you all have a great weekend. And you'll be getting an email from us at some point today, probably telling you how to become part of this whole family. All right. And that's it. Thanks for coming. We'll see you at the top.